Ericsson shares falling after the company reported a 42% fall in third quarter profit. The telecoms equipment maker also announcing further cost cuts to protect itself from the global slowdown. Well, here to discuss the numbers, Hans Vestberg, Chief Executive of Ericsson. Mr. Vestberg, thanks very much indeed for joining us live from Stockholm. Now, we've been hearing a lot from our CEOs this week that the third quarter was pretty much going okay until September, and then things got really bad in terms of visibility. Is that what you've been seeing?
No, we didn't have much surprises in our quarter. We were stable on revenue. We had basically the same revenues as last year in the third quarter. So we had our normal mix that we've had, very strong on services, growing some 19%, and networks coming down with 17%. So it was very much as expected, but basically flat sales quarter over quarter and sequentially.
How long can operators actually hold off from buying new equipment before either capacity or quality constraints actually force them into your hands, as it were?
We have a different pattern. I mean, we have different markets. I mean, of course, Western Europe is a little bit slower on investment due to macroeconomics. On the other hand, you can single out North America, which we're growing 16% in this quarter. So there are different markets that are investing at the moment. But in totality, we're coming down right now. And one is, of course, that CDMA equipment for North America is down 50% for us. But last year, we were growing basically 20% in network. So it's a little bit up and down there. And services instead is now growing with 19%.
But the fact is that people are holding back from investing. How much is that affecting you?
I think that there are investments happening, but of course there are some cautiousness, especially in Europe, I would say. And that is nothing new for this quarter. We have had this for 3-4 quarters. So there's nothing new that has come out for us. We have basically the same consumer demand on mobility, broadband, new devices that are impacting the operators. Then you can come up and down on capex investment or infrastructure investments.
Okay. And now you say you're looking for more cost cuts. What are the sort of targets, and where and when do we see these cuts?
I think we are constantly working with efficiency. Ericsson has operations in 180 countries. We have a broader range of products and services. There are always areas where we need to redimensioning, and that we're doing constantly. So this is just to tell whatever we can control, we will control in this company. We have done already a lot of cost cuts this year, and we will continue to see what efficiency we can do. And that is more to control our own destiny when things might not be all controllable outside us.
Well, speaking of things that are outside your control, are there major opportunities now in the United States with the suspicion, nothing to do with you, but the suspicion about the Chinese operators, Huawei, for example? Does that create a big opportunity for you?
I think we're focused on our own companies and our own strategy rather than looking around us so much. We have a fantastic position in North America. We're the main supplier to all the larger operators in North America right now, and they're delivering 3G, 4G equipment, but also services. So North America is an important market for us, but of course we have other markets as well. So we will continue with our strategy to base it on technology leadership and service leadership, and we are number one and double the size of number two in our industry when it comes to mobile infrastructure.
Okay, now the industry itself is really struggling. How long do you think before serious consolidation comes in? I mean, have you looked at the options of buying perhaps Nokia Siemens or Alcatel-Lucent?
No, I think that in our case, we are very focused on our own execution. You can look around and, of course, seeing that it's really tough out there. But for us, it's much more now to sort of capitalize on the investment we have done. We have increased our R&D for a couple of years, and we have increased our market share. So now we are in execution mode of that, and that's the most important for us, to bring up the profitability, especially in our networks division. Services and support solution, they're doing well, and they have a continuously improvement on bottom line. So it's more about now to see the projects we're taking over, that we really are executing them well.
Okay, so I'll flip the question round. 40% of world mobile traffic travels through your systems already. How can you raise that number significantly, say, without acquisitions?
Now, I think that if you have superior performance on a technology and really are customer-centric, you have that possibility. And our job is every day to be there with our customers in the 180 countries we are, and to deliver superior performance on the technologies. Because finally, you and I as a consumer, if you get a little bit better performance on your mobile telephony, you are more likely to stay with that operator. And of course, that's very important for the operator. So we are building a lot on superior performance. So that's how we believe we can increase and be even stronger.
OK, that's all we have time for. My thanks there to Hans Vestberg, the Chief Executive of Ericsson, joining us there from Sweden. I'm Nigel Stevenson. This is Reuters.